Hello and welcome back to Dynamic Trader Tutorials, the price series. This is your bonus tutorial number 5. We're going to talk about any market, any time frame trading. I'm going to show you here in this 5th bonus part of the tutorial series how to identify very narrow range, high probability price target zones for trend reversal with multiple time frame price reversal zones. Let's go ahead and get started.
The data I'm showing here is the NASDAQ futures, and it's just 5-minute data. So let's take a look at this market, and the market's in an uptrend, and we're anticipating that the decline from the high that's shown is going to be a correction, and we always assume that a correction will be at least 3 swings, in other words, at least an ABC, as you learned earlier in this tutorial series. So if the market's made an A and if it's made a B, we can calculate or project the high probability target for a wave C. And notice that I have a question mark on the B high. Until the NASDAQ declines and takes out the wave A low, we haven't confirmed it's a B, but more than likely it is, because the high is just a tick or two away from the 78.6% retracement. And as you learned in the series, the 78.6% retracement is typically the maximum retracement for a correction. Well, I can make the end of wave C targets right now. And so I've done the internal retracements of the rally. Now let's do the alternate price projections of the range of wave A from the wave B high, and I've done the 100% alternate price projection. And then we do the external retracements of B. And that's all we need to do. So we can take out this 50% retracement because it's already reached that. I'm just going to clean up the lines on the chart. And right in between the 61.8% retracement and the 78.6 is this 127% external and the 100% alternate price projection. These two are grouped a little closer to the 62% than the 78. And notice that the 100% alternate price projection is right here at 1658, and we always focus around that. So we've got a zone here around 1658 to 1659 that is the high probability target for the end of wave C. And if the market should decline and reach around that zone, that would be an ideal setup to consider a long trade to be long in the direction of the larger time frame trend. So let's add some bars onto this chart. And by the way, notice that I have put our DT oscillator down below. And I'll just teach you a little bit about in this tutorial how we use an oscillator to help confirm once a market reaches, or if a market reaches one of our target zones, whether that target zone is going to be good or not. So I've added some data. We had a sharp decline. We've taken out this little wave A low, so it confirms that this is a wave B high. I'll add another bar. We're now hitting the extreme of this target zone, and that's just a 1-point target zone. You can see how day traders love how we do our end of wave and our support and resistance, dynamic support and resistance targets here. So we've reached near the end of the high probability C target zone. We have the indicator, the fast line is already in the oversold zone, which indicates we're near a momentum low. So we have both the potential pattern of an A, B, C. We're in the ideal price zone to complete a wave C, and we're near a momentum low. So add another bar. Then we had a wide range up day, indicator turned bullish right from our target zone. Ideal setup to consider a long trade. All the conditions are in place. Probable ABC right into our wave C target zone. We got a nice corrective pattern. We have our indicators turned bullish, and the low is made just right in that 1-point zone for a wave C low. Let's advance this a few more bars. And by the way, this is an example from just a couple days ago, or I think it was just yesterday actually. So we do these all the time, of course in real time, and the key is we're prepared in advance for these setups. And we had a significant rally off that. Now, can you see, if you're a day trader, how useful this might be? Every correction is not a nice ABC. Every correction doesn't make its high or low dead on the projected price zone. But if we're prepared in advance for the possibilities, then it's just a matter of executing the trade strategy if the conditions, all the conditions get in place, just like they did here. So depending on your time frame trading and which markets you trade, you could have these setups every day. You might have even sometimes 2 or 3 of them a day. If you're looking at higher time frame, maybe 60-minute daily and weekly charts, it might be every several days or even every week or two if you're looking at, say, weekly and daily charts, to have these ideal setups. But you have to ask yourself, is there a reason to take a trade when you don't have all the conditions in place in your favor? So let's advance this data and look at how it worked out in the next couple days, see if there are any other setups. Well, I've advanced the data through almost the end of the day after that first little ABC correction that we had. You can see how the market advanced very strongly with just these very small little 3 and 4 bar, 2 and 3 and 4 bar corrections. No ideal little ABCs during them. And then we've had a decline, a rally, and another decline, and we've taken out this little swing low. So we have another potential ABC correction. If the higher time frame trend is still bullish, and it certainly looks bullish here, we have other trend filters that will help identify if the market is bullish or bearish. But right now we just want to focus on our price analysis. So if we have a completed ABC, or a completed A and B, and notice how I said that, if we have a completed A and B, what would the target be for our wave C? Well, let's just do what we've done before. Let's do our retracements, the internal retracements. And then let's do our alternate price projections. Let's see if I can click on the right one here. We'll get the 100. I want to get all 3, though. 62, 1, and 162, because we've got a wide range here. Okay. And then let's do our, now that was the alternate price projections of the swing down, what we've labeled as A from the wave B high. And then we need to do the external retracements of B. And then we have our 3 sets done for identifying a probable support zone. So I can get rid of this one, which is above the wave A. I'm just going to clean the chart up here a bit. And we have our retracements, 50%, 62, and 78.6%. But look at where we have this grouping. One is we have the 100% alternate price projection of A, projected from the wave B high, and that's our key. That's the one we always focus in on first, the 100%. And we have our external retracements of B, which surround it, but they're closest to the 50% retracement. So here's our zone for the high probability target for a wave C correction, and just a simple ABC 3 swing correction. And if it were to take out this zone, the maximum area should be right around here, which the 62%, which includes the 162% alternate price projection of A projected from B, 262% external retracement of B, and those are usually the extremes if we're making an ABC correction, right? And they surround the 62% retracement. So we can just take this 78.6% off, because if this market is making an ABC, one, it should make its low right in this zone of about 1673 to 76, and an extreme about 68 to 70. So we're prepared in advance for these price target zones. Let's just add some data on. Markets come right down into the ideal target zone to complete an ABC correction. We've already had a bullish reversal on our short-term momentum indicator. So everything's in place for this to make a wave C low, and now we can initiate some trade strategies. Well, we haven't talked about trade strategies in this tutorial series, but I'll just throw a couple out here. The two that we typically use is either once the conditions are in place to make a reversal, is either taking out a minor swing high like at this 1681, or because we've had a bullish reversal in our indicator, we just trail an entry one tick above the 1 bar high. Keep in mind this is 5-minute data, so we might be looking for a day trade. We might be looking for a trade that's going to last a few days, but at the minimum it's going to be short term. Now we've just taken out the trailing 1 bar high, so that's one entry strategy, and another is taking out this swing high, because all the conditions are in place to complete a corrective low right in this area. Let's add some more bars on. We came within about a tick of the low that's been made. Now we've taken out that, and that's our final signal that we have probably completed an ABC. Everything's in place. Typical corrective pattern, right into our target zone, high probability target zone. We had a momentum reversal, and we've taken out a little swing high. Let's add some bars on and see how this worked out just a couple days ago. Well, we've taken out this higher time frame swing high, so more than likely it's complete. Now we've taken out the swing high from the prior day. So had over a 10-point move so far at least, and we identified the ideal price target zone for a correction within 2 points, within about a little over 2 points. And you see how valuable this can be? Now, after this last ABC correction, the market came up very strongly, didn't make any nice little ABC corrections while it moved up so strongly into this area, and then we had a nice setup the first of the next day where all the conditions were in place, and that's how we trade. That's the edge that we have, is having the patience to wait for the conditions to be in place for a high probability outcome. So I'm sure you can see how valuable this can be to you no matter what market and what time frame you trade. Well, let's do a little review, and then we'll look at some more examples.
Let's talk a little about the trading edge. All successful traders have an edge on the market. What they try to do is identify the conditions with high probability outcome and minimum capital exposure. Now, dynamic price projections using the dynamic trader approach give you that edge. Dynamic price projections help you identify the specific narrow range, support resistance, and trend reversal zones in advance. Let's take a look at that one more time.
This is the IBM daily data, and let's not look at any sort of patterns. Let's just do our retracements and alternate price projections and see if we can find a significant resistance zone. Why would we be looking for a resistance zone? Well, maybe for one reason or another, we think that this market is in a higher time frame decline, or it's just going to make a temporary top. Now, for instance, our DT double smoothed stochastic is in the overbought zone, so we should be near a momentum high that'll be similar to this momentum high of a few months ago that resulted in about a 2 or 3 month decline. So even if we're very bullish on IBM in the long term, we might not want to hold this stock if we are anticipating that it's going to have a $5, $10, or $15 decline from a resistance area. So let's just do our internal retracements first. We'll put those on. As of the last bar on the chart, it's reached the 50%, but that doesn't tell us whether the 50% is going to be a resistance zone, because we need to do our other projections. Let's do our alternate price projections of this last swing up. We call that the external alternate price projection. And the 62% is below the last high, so we can just take that out. And the 100% is overlapping with the 62% internal retracement. So our 100% external alternate price projections overlapping with the 62% retracement, we're starting to build up right around that area. Let's do our external retracements of this last decline. And the 127 and 162% external retracements just evenly surround the 62%. So more than likely, if this market's making is about to make a high that's going to last for several weeks, it's going to be in this broad zone with a focus around the 50% retracement. So we can do we can do a 100% internal alternate price projection because we've got a nice swing up and a swing down. And oops, I missed that by a bar. Let me do it one more time here. Usually I would have a little bit less data on here so I can hit these bars earlier, but I want to keep the data on from this whole decline. And there's the 100%, which is just a point or so. Looks like actually less than a point from the 50% retracement and 100% alternate price projection. So we've built up, I mean, this is fantastic. And I'm just cleaning the chart up here and getting all these outliers off. I'm even going to take these two off. Because if this market's coming up and if it's going to make a top, it's going to be in this broad area of 87 to 90 approximately. And around 88 to 89 is the high probability target zone because there we have the 50% retracement, the 100% alternate price projection of the smaller time frame, and then the 100% external alternate price projection of the larger time frame. So this is pretty good. And for you Elliott wave folks, 1, 2, 3, 4, might be making a 5. And then we have our momentum that's in the overbought zone already. So if this market gets above 87.33 and right into this area of 88.89, boy, that's the ideal position for a setup if it reaches that area. So let's just add some bars on the chart. There we go. As of the last bar on the chart, we've reached this ideal target zone, this 1-point target zone for a high probability resistance, followed by a decline that's likely to be similar to these declines. And this was a sideways move, that's a decline, but they lasted several weeks, actually 2 or 3 months each. Now, if you were holding long IBM, would you want to hold it for a possible 2 to 3 months of no net advance and possibly a 10 to 15, or let's say 5 to 10 at least, dollar decline? Well, that would be pretty unproductive, wouldn't it? Let's add some more bars on the chart. We've gone a little bit above the ideal. Now we've hit the extreme of this price zone. There we've had a bearish reversal in our momentum indicator right within the extremes of our resistance zone that we projected in advance. So more than likely, and there it is. Over and over and over again, these sort of setups are made. And here we've gone down $10 from the peak. We had our momentum reversal about 3 or 4 bars off the peak, and we had projected in advance the high probability target zone to make a high that would probably last several weeks to even 2 or 3 months. And we've already had more than a 10% decline. So futures intraday, stocks daily or weekly, Forex, ETFs, all markets, all time frames. And you saw how quickly and easily we determined this resistance zone. We just put our internal retracements on. We did our alternate price projections, our external retracements of this last decline, and then we identified where all the key projections, the relatively narrow range of the key projections, and even the broad range of the limits. So let's look at a couple more examples.
Now, as we've mentioned many, many times before, the dynamic trader approach is an approach for all markets and all time frames. What we want you to do is gain the trading edge for all markets and all time frames using our dynamic price projections. Now, using these projections, a specific pattern is not necessary to identify the high probability support resistance and reversal price targets. What we do is make the projections in advance to be prepared to execute the trade once certain market conditions have been met. Let's take a look at some examples.
This is 15-minute Forex data for the US dollar versus the Japanese yen. Again, this is another example just from a day or two ago. We had of the data we're showing, we had a very sharp decline, and then we've had kind of a sideways advance since that decline. Well, if our analysis is indicating that the higher time frame is bearish and this is making a correction, how would we identify the probable target for a corrective high? Do our internal retracements, 50, 62, 78. Let's do our alternate price projection. And let's do our external retracements. See, it's just the three sets. We do those, and then we identify the zone, our zones, which have a relatively narrow range. So there we have the 50 and 62% retracement, and we have the 127% external that's just right over the 50%. Then here's our 100% alternate price projection, and of course that's the one we focus strongly on. 62% retracement, internal retracement, and the 162% external retracement falling on top of it. So the ideal zone is right here, because that has right about 116.51 to 116.57, because that zone includes one projection from each of the three sets that we've done. We've already reached kind of the minimum target, which includes 127% external retracement, but this would be the ideal. So if we were yen Forex traders, right now we'd be prepared to complete a corrective high. We should be within a few pips of a corrective high. Our momentum's extremely overbought, so the momentum's in a position to make a high, but more importantly, it's in a position to make a high that's going to complete a corrective advance and then eventually make a new low. So great risk reward if this market makes a reversal around this area. Let's add a few bars on. A little narrow range bar. There's a little wider range bar. And we just made a bearish reversal in our momentum. We were about, let's see what we were. We were 3 pips from our ideal target zone. Reversal in momentum. More than likely this high is complete. Just a simple trade strategy is draw a little line below the last minor swing low, takes that minor swing low out. More than likely this market is going to continue to decline to a new low. So we've identified that we're probably making a correction. The ideal target zone was just 3 pips above the high so far. Markets don't always reach those ideal zones. That's why I wanted to show you this example. It did already exceed the minimum, didn't quite make the ideal, but we've had then momentum reversal, take out a swing low, bang, this market should continue to a new low. What a great trade setup. Let's add some data on here. We've taken out that little swing low. More than likely a high has been made and the market's eventually going to continue to a new low. Doing a lot of oscillating around there. And there we go, down kind of sharply. Down more sharply. We're adding bar by bar here just to... There we go, I've got the chart kind of squared up. The market did just as anticipated, and we were prepared in advance for a corrective high and eventual decline below a new low by doing our price resistance zones of our internal and external retracements and alternate price projections. Market came 3 pips short of reaching that ideal zone, had a momentum reversal, took out a swing low. Bang and a bang and bang. All the conditions were in place to complete a corrective high. Then we do have a whole tutorial series about trade strategies, high probability, low risk trade strategies for entry and exiting positions, but I've just given you an idea how we combine both momentum and trade strategy and price targets for an ideal trade setup.
Okay, as you can see, combining momentum and trade strategies helps you create a complete low-risk trade plan. Dynamic price targets prepare you in advance for the support, resistance, and trend reversal price targets. The dual time frame momentum strategies identify the trend, position, and reversal. Now, low-risk trade strategies like these put you into the trade with minimal capital exposure and easily help you identify the most prime exit targets.
This is the 15-minute bond data, and the bond market is a great market to trade. It really just does these nice patterns and hits its reversals right at our dynamic price projections and our end of wave price projections. And I think I made my first bond trade in about 1986 or 87, so it's been almost 20 years that I've done bond trades. Well, as of the last bar in the chart, and this is 15-minute data, by the way, is we've had a rally, correction, another rally, another steep correction, and we made a new high. Now, what's our target if this market is making this 5-wave impulse pattern that we described in I think tutorial number 4, our end of wave? Well, let's find out where the high probability end of wave 5 target would be. So I'm doing it with the one click here in Dynamic Trader. It's the same thing you would do by doing the 3 sets of projections. And I'll just get rid of that one because it's below this swing high. So here we have the external retracements of this last swing down we've labeled as 4, the 127, 162. We've got the 100% alternate price projection of the range of wave 1 projected from this low of 4. And we've got the 62% alternate price projection of the net range of 1 through 3 projected from 4. So we have all of our 3 sets of projections around here, and I'm just going to take this higher one off because now we have a zone 113.10 to 14 that includes one projection from each of the 3 sets. High probability target zone to complete the advance off of this low from 2 or 3 days ago. Now, do you think that would be a great setup for either a correction to this advance and possibly a decline to a new low, but at a minimum a correction, which would probably be more than a full point? Now, if you were long, what fantastic piece of information to know that you're within probably a few ticks of this market completing the advance from began several days ago. And we have our DT double stochastic indicator in the overbought zone indicating a momentum high is near. We have a probable pattern that completes the advance, and then we have the high probability price target zone. Let's add some bars on here. As of the last bar, we are now in the high probability target zone to complete this advance and get a correction of at least 50%. So let's add some more bars on. Little decline, little rally, and then a decline below a swing low. And of course, that's our signal that more than likely the top is complete. And we got that signal within just ticks of the high. Of course, if our trading strategy would be to sell below that swing low, a little stop above that high, we got to stop about 4 or 5 points, ticks away for a probable decline of 50% or greater. Let me get my right set in there. Probable decline to 112.19 or greater. So, and then we had our reversal and our momentum. So reversal and momentum, high probability price target that we projected in advance, a little trade strategy for a short trade or to exit a long trade. And we do have a whole tutorial series just on trade strategies and trade management, including entry setups, entry triggers, and exit targets. And then we also had our momentum reversal. And again, we have a whole tutorial series coming up on momentum, just on multiple time frame momentum and how we integrate that in our trading plan. So everything's coming together here for a decline that will probably reach at least 12.19 or so. I'm going to just add some more bars on. And this would be for what we might call a swing trade, one that's going to last 1, 2, or 3 or 4 days, something along that line, minimum of that. Just that's how long a correction would likely be to the decline. Keep adding some bars. We had a spike up, but nothing's voided the probabilities that we're going to have a decline. Sideways, there we go. We've already reached the 50% retracement. So let me square the chart up here a bit. So we've reached at least the minimum objective of this retracement, a correction to this advance, and we identified within just a few ticks of where the high was. We had our trade strategies to enter short, and market went sideways for some time, but there was nothing that voided the probability of a continued decline. And again, in our trade strategy tutorial, you're going to learn why you hold on to trades and identify what would void the trade that you're in and how you adjust your stops and all that sort of thing. So another great example, great setup. How would we have done these projections if we didn't have Dynamic Trader to do the just the one-click end of wave 5? Well, we just do real simple. We do our, let me just click on hot pivots, 100% alternate price projection from the wave 4 low. We would do our external retracements, and we do the 3862% alternate price projections of 1 through 3. So there we go. It's the same ones that I had on with the earlier with the one click. I'll just clean the chart up and you can see. Same ones, 113.10 to 113.14. So keep your price projections up, your internal, external retracements, your internal, external, alternate price projections. If you have a potential pattern forming of an ABC or 1 through 5, do your specific projections for those two patterns. If you don't have the pattern up, just do your other projections and look for the little fairly narrow range clusters which have a high probability of support and resistance, as you learned in the earlier tutorials. If you do that, no matter what market, what time frame you trade, boy, you're going to find a tremendous difference in your trading, because you're going to have a very, very significant edge that most other traders don't have, that don't know about these dynamic price projections. So thanks for joining us with this tutorial series, and I hope you're going to join us with more of our tutorials on momentum, on pattern, on trade strategies, and they're all practically oriented to make you a complete, confident trader based on practical trade strategies. Thanks for joining us.
Well, that's it for this 5th bonus section of the price series of tutorials. In this tutorial, you learned how to use multiple time frame price target strategies to identify in advance very narrow range price reversal target zones. You also learned that MTF price targets are quick, simple, and very effective. And finally, you also learned that this technique is applicable to all markets and all time frames. Well, I hope you've really enjoyed this, and I hope you'll join us for our other practical trade tutorials where you will learn about trade management, you'll learn about timing, we'll do a tutorial on multi-time frame momentum strategies, and much, much more. Thanks so much for joining us. My name is Chad James. I'm the CEO of Dynamic Traders Group. For more information about this tutorial series or other tutorial series, check us out on the web at www.dynamictraders.com. Again, thanks for joining us, and good trading.